Hello students, in this video we are discussing third chapter of economics of 10th standard which deal with money and credit. In this video we will be discussing the barter system, the economy which existed before the invention of money and modern forms of money, then loan activities of the bank and two different situations. One person's situation better off because he got a loan for less rate of interest, and another one because of high rate of interest the condition become worse off. So how these loan system or getting a loan for cheap rate of interest make the difference? So these are all the things we will be discussing in this video part first, money and credit. Come, let us discuss now. Barter system problem gave rise to the existence of money. Earlier, money was not like this. Today, what we are seeing, the paper currency. Initially, it was goods, then animals used as money, and then metallic coins and paper currency, and even recently we are using e-notes, e-currency. That means plastic cards like debit cards and credit cards. Money means anything if it is accepted universally by all the people as a medium of exchange is called money. Before the existence of currency, economy was depending on barter system. Barter system means goods were exchanged for goods. That means goods itself medium of exchange. The problems of barter system gave rise to the existence of currency. Then let us see which were the difficulties or problems involved in barter system. The first one is lack of double coincidence, lack of measure of value, and division of value. These are all the major problems associated with barter system. Let us see what is double coincidence. Double coincidence is the situation in which both the parties have to agree to buy and sell each other commodities is called double coincidence of wants. Let us take an example. The shoemaker wants to buy wheat and the farmer wants to buy shoes. Then they both can exchange their commodities. This is what we call double coincidence. But majority of the times this would not have been taken place. That's why it is called as lack of double coincidence. In the time of barter system, the measuring of value was also difficult. How to measure a value of a thing, and there was no measuring rod like today's money. So measuring the value of a good or services were very difficult. Division of value is also the other problem. So dividing the value of a good was the problem in those days. Nowadays it's very easy because we have different denominations of currencies, so we can make any payment of different values. But in those days, division of value, divide the value was very difficult. There are three types of modern money. First one is paper currency, second one is demand deposit, and third one is check. Paper currency is also called as legal tender. Legal tender means government stand guarantee for the value of paper currency. That's why people, even though the paper currency has no value of its own, they accept it just because it is legal tender. The second one is demand deposit. Demand deposit is also called as savings bank account of the bank. It is called as demand deposit because whenever the customer demand for their money, bank should be able to give them back the money deposited by the customers. That's why it's also known as one of the forms of money. Check, it's nothing but a written instruction given to the bank by the bank customer to pay a specific amount of money to whom the check has been issued. This is what you call check. It is nothing but paper instruction to the bank. Do you know how commercial bank they provide loan to the customers even though they don't print the currency? The currency is only printed by RBI, but loan is provided by commercial bank. Do you know how? As you all know, the customers they keep their excess amount in the bank as savings bank account or fixed deposits. So banks keep only a small portion of their deposits as cash with themselves. Do you know why they keep a small amount of deposit with them? Because whenever customers come and ask for their money, bank should be able to provide them the cash. That's why they have to keep a small proportion of deposit as cash with themselves, and the rest of the amount will be given as a loan by banks. That means banks use the major portion of deposit to extend loans. Hence, banks make use of the deposits to meet the loan requirements of the people. And bank charges a higher interest rate on loans than what they offer on deposit. That means if you want to take a loan, you have to pay high rate of interest than what you keep your money as deposits in the bank. In our textbook, two different credit situation has been given. One is of Salim, another one is of Sapna. How the credit situation make one's condition as better off and other ones a worse off. In the case of Salim, Salim was a cobbler. He got the order of 1,000 shoes to prepare, and fortunately he gets the loan for less rate of interest, and he'll be able to manage all the cost what he has to bear, like expenses of production, what we call, complete the production on time, and thereby increase his earnings. So his earnings increased because of timely loan he got. So this made his situation a better off. Therefore, credit plays a vital role, positive role in this situation in the case of Salim. In Sapna's case, the situation was very different. See there, the failure of crop made loan repayment impossible. Sapna was a marginal farmer. Marginal farmer, you know the meaning of marginal farmer. Marginal farmer means the farmer who has very less proportion of land. So 1 acre, 2 acres of land, many of our farmers will be having. Such kind of farmers are called as marginal farmers. So if crop fail, then they will not be able to repay the amount what they have taken. So this is the situation we will be seeing, we will be watching in agricultural segment. She had to sell part of the land to repay the loan. See what condition she has reached to repay the amount what she had taken, and now she has come to the stage that she has to sell her land to repayment of the loan. So in Sapna's case, credit instead of helping Sapna improve her earnings left her worse off. That means she has been kept in debt trap. So we call it as a debt trap. So students, till now we have discussed the meaning of barter system and its problems and meaning of money and the modern forms of money, the loan activities of bank, how the commercial bank, even though they don't print the notes, currency notes, they will be providing loans for the people, and how they provide loans, and then importance of loan at cheap rate of interest. So timely loan, how they make one person's situation better off, and how the um, if we don't get the timely loan and even high rate of interest, how make a person a condition worse off in the case of Sapna. These are all the things we have understood. So in the next video, we will be discussing the two source of credit, that is formal and informal source of credit, and which one is better, which one is not good, and what are the terms of credit. Then nowadays you might have heard about self-help groups that has been formed in rural area to strengthen the economic condition of rural women. So how they play a vital role, important role in improving the condition of poor people. So these are all the things we will be watching in the second video. So that's all for the first video. Thank you.